it's all about the power of networking and how we can all come together collectively to find solutions for common problems, the common man, and make life better for them. Today we are proud to introduce Ved Uke. He has passed out in 2016 from RIT as part of the BE Auto batch. He is a very innovative and has a great entrepreneurship-based mindset. This has enabled him to think out of the box and move to UK. And he has part of various companies that he has started. One of his companies, Aurum Tech Holdings, where they help startups get funding and enter new markets, specifically in EU, UK, and USA. He's the founding partner of this firm and is responsible for pre-investment evaluation. We're thankful that you've joined us and you're going to be addressing us with. He is going to speak to us today and advise us on the various types of funding that are available in the markets, and also about how evaluation of projects are done when we approach venture capitalists for funding. So I'm not going to take any more time and hand over the platform to Ved. So Ved, if you can please
Thanks, Ved. I can share my screen, right?
Yes, please.
Sure. So first of all, Vyas, I'm really thankful to you to give me this opportunity basically to share my knowledge regarding startup and how the investment works with other RITians and alumni and professors. About 4 to 5 years back, I was basically sitting in one of the classrooms in RIT and listening to Pisar sir, as I had taken his optional module in the final year, and he was teaching all about startup fundamentals then. It's basically my honor to present it again in front of you all, and I don't know if Pisar sir is here or not, but yeah, it is really really a great feeling. Okay. So basically today, coming back to the presentation, basically today I'm going to speak to you all about startup fundamentals. I'm going to speak about how investors approach startups and what they are looking in for. What are the available investment types in these in the current scenario? It's quite possible that it could be different for different demographics. For India, or for UK, or for US, or for Canada, there could be slight differences in the availability of the type of investors, but generally they are consistent throughout all demographics. So Vyas has already introduced me and who I am and what I do. But just to give you all a brief about what exactly I've done and what exactly I've come to this far. Basically, I just recently, with another partner in the UK, we've started my second firm in startup sector, which is Aurum Technology Holdings, where we are working with different startups across the globe to help them enter new markets, raise funding from them. It depends on what kind of funding they are looking for, right from VCs to angel investors to non-equity grants. So we basically work in startup sector under that firm. Before that, in 2019, I started Voxman Roberts, which is basically an import-export management firm. We started out as an outsourcing solutions firm for SMEs in the UK, but soon we established ourselves as an import-export management solution, and it has been going great. We are working in different sectors, helping businesses to import mass manufactured products from India and also export their products to countries like Dubai, countries like UAE, Oman, Yemen, etc. and etc. Before that, the beginnings of my startup journey was with Xenon Strodum, which is still existent, and it is run by my partner in Mumbai. So this business which I started was basically to help engineers commercialize their final year projects And this is where RAAH and what Vyas is doing is aligning with my own personal values, and I really appreciate that. So Xenon Strodum, we started with 7 brands under the company, 2 of which have raised Series B investment, and others are still running. They're doing very well for themselves. Before that, again, I was working with a lot of startups. We've worked with corporates like Suzuki. I was a regional sales manager for Nexa, if you all know about Nexa. Then I was working in startups in automotive sector. I was leading Kaza Motor Company back then. So it was one of the resto modding startups based in Mumbai, where we had raised about 50 lakhs worth of investment for the company. So that was another one of my achievements there. So this is where basically I would really speak about how the startup journey was, and from all of these experiences, I've basically collectively put this presentation together to explain what and the best routes for startups could be. So coming to investors now first, understanding what investors are, how they work, what are the different types of investors, and how they work along with startups. So basically, as per me, what I've done is I've grouped the investors into 2 different groups. That is, one is the tier 1, which is the most easily accessible and the easily approachable group. The second one is slightly difficult and should be approached generally at an established stage when the startup has already proven concept and has gone further in terms of generating revenue. So this tier 2, which is the second group, should generally be approached on a later stage of the startup journey. We'll go further, and I'll go further and explain what these groups mean and how they work around. So the first group is basically angels, angel groups, non-equity grants or funding, family offices, banks. So most of the startups, you all know that you need funding. Everyone knows that. But how should we generate that first fund in order to start and get the ball rolling? So angel and angel groups are basically anyone who basically comes into your business and gives you the money to run the business. It could be your family members, it could be your friends, it could be anyone, your professors, teachers, anyone who you personally know, you've built personal relationships with, and they know and they trust you that whatever money they are giving you is not going to be utilized for, is only going to be utilized for the business and to grow and scale the business. So angel and angel groups is one of those categories. One difference between angel groups is that generally what happens is when you're approaching a group of, let's say, a group of doctors, and you're a healthcare startup, you're working in the healthcare sector. So what they would do is one of the doctors would become basically the leader of the group and make decisions on behalf of the group. And he would go further and convince his friends basically to invest in that company. So angel groups is basically a group of investors, and all you have to do is convince the leader. So that is the main difference between angel groups and angel. Angel generally works on his own, and he or she would make and take decisions on their own. Non-equity funds. Now, these could be anything ranging from mentorships, could be ranging from competitions, any prize money that you win from a competition, anything that is given by even for government. In some cases, like in countries like US, Canada, UK, there are grants which are issued by the government in regards to startups. So if your startup is eligible for that type of grant, you generally get it. Obviously, there is a due diligence process that you go through. Family offices. Now there are, in India specifically, I'm sure you all know that there are many businesses which are run by family members itself. So the generation after generation is running that business, and they have a peculiar choice in regards with what type of businesses they want to work with. it's quite possible that they may invest in your company. They would take considerably large amount of equity and become a partner, become a considerable partner, and then work alongside you rather than just be a sleeping partner where they've just given you the money. So consider that in regards with approaching family offices. Banks are the most common thing. I think the most common investors that everyone knows. They're easily approachable. In some cases where the startup is really good, the idea is really good, and you have really good relations with that bank, it's quite possible that you would get unsecured loan from them, which is called a debt investment, but it still is an investment. So it is still considered as banks are still considered as an investor. Coming to the second group. Now this group is more difficult to approach. They are more peculiar about what kind of startups they want to work with. They are really testing the market in regards with your startup. Your startup is not the only one which has approached them. They generally get at least 5 to 10 messages a day asking for investment. So they are really, companies and organizations which are not really easy to work with. But if you prove concept in a way which is really valuable to them, attracts their own attention, then these organizations are brilliant. So let's talk about venture capital. VC firms are basically organizations which are some kind of an investment banking kind of firm. So what they are basically is that as an investor, these clients are giving them their money to invest and scale up. They can multiply it by 2x, 3x, 4x. It depends on how these contracts work with their clients. So these people who are running this venture capital, they are constantly monitoring businesses. They want to see which business can actually give them a 3x, 4x, 5x return within 2 years or 1 year or 3 years. It depends on what their criteria is. If you have a startup which is scaling at that rate, at a really fast rate, it's really easy to get a VC fund. If not, then it's quite possible in some cases the VC company starts working along with you to bring you up to that level. If not, they would just go on further and go to the next company. Accelerators, incubators are something that in India, the term is used in some other way, which is not really, how I can say, feasible or viable in regards with startups. I'm sure Vyas and the other members in the alumni group there who are abroad, they definitely know how accelerators work, and the incubators, how they're investing in these startups. At least I can say in terms of the UK, the accelerators and accelerator programs which are working here, they have an extremely difficult due diligence process where they test the entrepreneur, they test the team, they test the concept, constantly hammering you in every way possible. They keep challenging you throughout the due diligence process. And at the end, if you still survive that process, that's when they will say, right, you're coming onto our accelerator program and we will make sure that you are going to get the investment that you need. So they often have investors on their panels, and these investors are the ones who are constantly looking at an opportunity to basically scale up their money. So that is what needs to be understood there. In India, it's quite possible that there would be some accelerators who work this way, while there would be some accelerators who are just namesake accelerators. So be careful about that. Coming to crowdfunding. Crowdfunding is really a term which is nowadays easily thrown up in the market as soon as you say that you have a startup. So crowdfunding is something that you really need to work on hard. It is a difficult process. It's not as easy as it looks. You have to create a lot of PR. You have to invest in marketing. You have to invest in creating that whole personality around your startup, so that people start engaging with it. There are platforms like Seeders, Crowdcube, and many more. Nowadays, there are other platforms also coming up which are helping businesses to generate crowdfund. Now, one of the main things about crowdfunding is that people and businesses, these entrepreneurs feel that as soon as they list their company, they list their target, let's say £5,000 or £10,000 is their target for raising investment in this round. They feel that as soon as they start listing it, it's just going to go up and up and up, and they're just going to constantly generate investment. But that is not the case. When you're doing crowdfunding, you are the first people who have to get the ball rolling. You have to get investors already engaged with you before the crowdfunding round starts, before you list your company, and before that whole process goes live. So before all of that, you have to get these investors and make sure that they are ready to fund this crowdfunding round. Unless and until you have at least 15 to 25% of the funds ready to go for, crowdfunding round isn't something that you should go for. Most of these platforms which are raising crowdfunding and which are crowdfunding platforms, they have some criteria, like unless and until you reach your target, the rest of the money is refunded back to the investors. So you have to be really careful in regards with how you raise the crowdfund. It's difficult, it's not easy. Make sure that you're ready with all the tools that you need to get the round started. Coming to corporate investors. Now, corporate investors are something like Tata Group, for example. They are something like TCS. They are something like Google, for example. So when startups show potential or they're competing with these kind of giants, it's quite possible that these corporate giants come at you and just eat you up. That's how we call it. The best example that I can give you is Google buying Ecosia. I'm not sure how many people here are aware about Ecosia, which was basically a browser. For every search that you did on that platform, they would plant a tree. And Google saw this as a competition. They made sure that the competition doesn't exist, so they bought it. It's as simple as that. Even in regards with Tata, there are many companies and many startups which are becoming their own competitors. So what they do is they basically go out and buy them. They won't close this brand down. They won't close Ecosia down, but they will continue to run it under their own umbrella. So they would generate the income in parallel with their current platforms. Government bodies. I don't have much knowledge in regards with Indian government and how the funds and grants work in regards with government bodies. I'm sure Pisar sir, I think recently had generated a huge fund from some kind of a government body, so he would be much more ideal to go to in regards with this. If it's in the UK or US, I could help out in regards with that. Government bodies are basically some organizations like, just for example, I can give you a UK example, like Department of International Trade. Since we work in import-export businesses, and since we are going and transforming the current processes that they are utilizing in the UK, the Department of International Trade is constantly monitoring us and seeing how we are innovating and how and what exactly the processes are we using to create a new product or a new service. If we reach a point when they are ready to see, right, this is the ideal time, this company is gonna have a J curve. J curve is basically something like this. J curve is as basically the point when the business is going to scale up at 100x, 200x, or 250x. It depends on what the startup is, and any investor would like to be a part of any kind of such a startup just at the beginning of that J curve. So remember that government bodies also are monitoring. If you're abroad, I'm sure in regards with the with UK, Canada, and US governments, slightly unsure about Indian. So you can speak to Prasad sir regarding that. One of the most common investment types which is overlooked is public listing. I'm sure most of you have heard about public listing, stock market, shares, how they're working, and what exactly is happening there. Public listing is something that you need to be really careful about. All the government bodies across the world are extremely strict in regards with which companies are going for an IPO or a public listing. They have their own due diligence process. They have their own scrutinizing process, which is extremely difficult, extremely hard. You have to be complying with all sorts of legalities. And if you get through, it's an amazing opportunity. If not, it's still a work in progress. One of the best examples, I think, which went bad was the Sahara Group. As soon as it went public, the company basically shut down because of the scrutinizing and the due diligence process that the whole company had. Before that, it was running very well, and you know the whole process, what has happened with Sahara Group. But public listing is something that you need to be careful about. If you're a really white paper company and everything is white, then your share market is the best thing to go for. Now we are coming to the sectors that these investors look into. We've discussed all these investors and how they work. Now I wanted to show you what are the 6 potential markets in the Indian demographic where these investors are working in extensively. These are all high potential sectors and they are all getting investments. Obviously, you have to prove concept. Obviously, the journey of the startup is scrutinized, but it is much more easier to gain investment in these kind of sectors rather than something like a health sector, like healthcare or health tech, something like that. Hyperlocal. Now everyone knows Swiggy. Most of the students who are living in cities, who are from Pune, Mumbai, Delhi, these people know what Swiggy is. So Swiggy is something which has scaled up. But one thing that I would definitely love to share is Swiggy has scaled up so fast and it has expanded so aggressively in the Indian market, but it still hasn't generated a single rupee of profit. You can go on and search about it. I've done extensive research on Swiggy and compare it to its UK counterpart. So that is one thing that you need to be careful about. Swiggy is something what is called the bogus investor's dream because the company is not generating any profit. All it's taking up is investment money. It's just consuming money constantly and it's just scaling up on the basis of investors. So the valuation is going up, but the profits are zero. Travel and hospitality. Everyone knows Go Ibibo. Oyo rooms are absolutely famous across the world now. We've got Oyo rooms in the UK as well, in Cardiff and London. So everyone knows what Oyo is. Go Ibibo as well. These are some of the startups which have generated a lot of investments. B2C, Ola, Snapdeal. Renew Power is one of the companies which is working in electricity sector. So in the power sector, energy sector, you guys should definitely check it out. EdTech, Byju's. EdTech is basically booming right now. All sorts of companies are coming onto the market in regards with EdTech. It's really interesting, how our education system is changing in India. About 15 years back, education as a sector was booming. Coaching institutes, classes, and all of these sectors, these companies, they were booming and they were expanding, and everyone knows Mahesh Tutorials and how they expanded and how they got investment from Dubai and etc. and so on. So these companies now are transforming into something called as EdTech, and Byju's is leading the way now. So it's really interesting. In fact, another interesting point about Byju's is that it has entered the UK and Canadian market as well. So it's expanding globally. Wallets. Paytm, everyone knows. MobiKwik, FreeCharge, these are one of the platforms which I'm sure everyone here has used. And these wallets are also generating a lot of investment because the services and the add-on engagement that they are getting in India is really scalable, and the valuations of these companies are increasing about on an average of 200x. B2B, Udan, Inmobi, Perpue. There are many other businesses, but I couldn't name everyone. So these B2B businesses are also something that you really need to check it out. Urban Clap is also I think one of the B2B businesses. You should check that out as well. The story of Urban Clap, it comes between B2B and hyperlocal. So check those out. Their stories are really interesting, and the way they've worked and the way they've scaled up is something that you all should follow. Coming to the startup side now, we all know that investors are not easy to approach, especially in India. It's difficult to approach. They're a bit peculiar again about what kind of startups they are engaging with. Every investor has their own portfolio. So there are investors out there who love only tech businesses, so they will only invest in tech. There are investors who only work in healthcare sector. They have portfolios for travel and hospitality sector. They have portfolio for restaurants. So you need to be careful on what kind of investor you approach on. But when you approach these investors, what exactly are they looking for? Is your idea that you've probably written down in a 40-page business pitch, is that enough? That is the main question. I've recently, I think someone dropped me a message on LinkedIn and shared a really good business proposal, well written and everything. They had a good team and stuff, but they hadn't done absolutely anything in regards with physically developing that product. I just said that, you know, this idea is fine, good, but where's the prototype? What exactly can I see to invest in? He just comes back to me and says, oh, I've got a really experienced team. What about that? And what does that mean? Nothing. Absolutely zero. Null, nothing. Please understand this. Unless and until you work and show a physical product or a physical service which has generated revenue, no investor is interested in working with you. Simple as that. So coming to business idea, these are the 4 most important points that I felt that I believe you all should know about. And why are they important? I'll just share it with you now. First is value proposition. So what is this business idea that you're developing? Is it unique? Are there any competitors in the market? Have you done any research in regards with developing this? How have you come about this idea? What exactly has motivated you to develop this idea? Okay, you've developed this value proposition, but is there an MVP? Is there a unique selling point? Do you have a viable product which is already selling and people are paying you for it? That is what is important. Coming to route to market, what is the commercial strategy? If you've developed an MVP, how are you going to scale it up? How are you going to reach as many people as possible? And how are you going to generate revenue from it? You need to understand that as soon as I hear startup these days, the first thing that they say, yes, we are going to market it on social media. Understandable, but is your startup ready for that yet? Are you in that phase where your product is ready to be accepted by mass public? You need to understand that. Also, it depends on what kind of a startup you are. Your consumers are someone you really need to be understanding. Financial structure. What is the stock value? What is the share value when you start, when you develop the MVP, after you register an IP, for example, after you start generating revenue? The financial structure is really important. Hedging. How are you hedging any kind of risks? How are you mitigating any further future risks? That is also important. For example, one of the examples that I can give you from UK is Debenhams. Debenhams is a company which is similar to Westside or Pantaloons, which I'm sure you all are aware of from Future Group. So this brand is basically a retail chain for clothing products, textile products. But as soon as the pandemic hit, their stores were closed. They had no revenue, no walk-ins. They had no online platform existing. Their sales dipped. They had basically no revenue, and all they were having were expenses. What do you think happened to them? The brand shut. It's as simple as that. So you need to understand that investors do look at financial hedging as well. They want to know if whatever money they are investing in, whatever amount they're investing in is safe. They need to know even apart from return on investment, even if they get their money back, they're fine with it. They're happy with it. It's like cost of risk, something of that sort. So you need to understand that hedging is really important, and the entrepreneur or the CEO of that company is responsible for financial hedging. Employee stock options. This is something really interesting. I don't know how many people are aware about it. It's a really interesting point. Some investors are really peculiar about this as well. I've seen and I've dealt with a couple of investors who have asked startups how many stock options have they given away, how many stock options are they liable to pay for. This every entrepreneur needs to be aware of. When you're building a team, I can understand in the physical, real terms, we don't have a lot of funds to, basically pay a good amount of salary and get the best employee or the best skill set to your company. And for that, what you do is basically give away employee stock options, and basically give them the guarantee that whatever stock options they are getting, they would basically generate 100x revenue or 200x revenue after 3 years, 4 years, something of that sort. But you need to be really careful in regards with who you're giving it to. If you're from, let's say, just for example, if I'm developing a technical company which is based in IT, and I'm not a person from IT background, so employee stock options are something that I would give to a person from an IT sector who is really knowledgeable, who is really skilled, and has an absolute expertise in the sector that I'm looking for. But I wouldn't give that to someone who is doing an administrative job, because that's just not worth it. So be mindful of that. Investors do look into it when it comes to investing in your firm and scaling it. Last point, intellectual property. What is the IP ownership? How are you going about it? Who is the right owner of the IP? Is it the entrepreneur himself or the company? People won't invest in the company if the IP is owned by someone else. Be mindful of that. If you're just a plain distributor or if you're just a plain manufacturer, investors do not invest in that. You need to have an IP ownership. Coming to problem. This is the biggest point of any startup. Everyone says we've developed a solution for this, we have developed a solution for that. But is the problem big enough? Is the market size big enough? Have you defined it very well? How many people in this world or in your demographic that you're looking into are actually facing that problem? That is really important, and that is what is the starting point of any investment pitch. Please be mindful of that. Is the market ready for that, for the solution that you're giving? Is it too far ahead? Is it not the right time? Is it not the right strategy? Be mindful of that as well. Some examples here that I can give you of importance of strategy and how they couldn't define the problem well enough, or they stopped innovating. Blockbuster, the best example that I can give. Vyas must be happy that I've put it on here. So So Blockbuster is one of the biggest examples across the world where it basically shut down in a single day. Blockbuster was basically a retail chain across US and I think Canada as well, where this company was basically a retail chain for used exchange of DVDs, movies, and games, and so on and so forth. Netflix came and basically wiped Blockbuster off the map. Basically, it's literally in a single day, Blockbuster had locks on their doors. Netflix was a tech platform. It was innovative. It was easily accessible. Everyone is using it across the world now. It has become a global platform. Blockbuster stopped innovating. They just thought that Netflix is just a fad which will come and go. What happened? Blockbuster shut down. Kodak. Everyone knows what Kodak is. The best photography company in the world at one point. 1977, Kodak was the first company in the world to develop a digital camera. But after that, what happened? They marketed it in 1977. They couldn't get it, off the shelves. People were not interested because it was too expensive for them that time. And today, everyone does anyone here when you're traveling and going about, do you even think of having a digital camera or a Kodak camera on you? No. We all have our phones. They have brilliant cameras. They have Sony cameras and lenses and so on, which Kodak could have developed. It didn't. They stopped innovating. Being from an automotive background, I can definitely give you examples of the automotive sector. Jaguar, Land Rover, Daimler. Jaguar Land Rover was a company which was owned by Ford up till 2010, somewhere around that time, which is when Tata bought it over. What basically happened with Jaguar Land Rover was that they were a company which was, they were really proud of being British. It was an iconic British brand owned by a US company, but they had stopped innovating. Ford was, giving them money. It was investing in them. It was constantly trying to push them forward. But Jaguar Land Rover, as a consortium, it just stopped innovating. They just thought that their brand name is enough to sell the product. Didn't work. Ford basically got tired of it, sold it off to Tata, and look at how Tata has brought transformation in. They have constantly been innovating new products, new developments, and again, they've brought the prestige of Jaguar Land Rover back. I myself own a Jaguar, so I know what is the difference between the old one and the new ones. Tata has done a brilliant job, and Tata has brought that innovation segment back into their own company as well. And today you can see all these XUVs, sorry, that's a Mahindra product, sorry, Ultras and the new Safari and all these products. These products are all having equivalent innovations as per Jaguar and Land Rover. They have almost similar teams for innovation, and they share all of their knowledge together. Skype, best example. Skype is someone who had basically been screaming for 10 years that their platform should be used for easier meetings and for connecting people and so on and so forth. They had a chance in 2020. The 2020 year was the year that Skype could have basically scaled up, showed the world that this is what we've been waiting for, and this is why we are here for. But no, a Chinese company comes in and swoops the market easily, which is basically Zoom, and slowly and steadily Google came about with Google Meets. Microsoft then again innovated a new product, but it was too late to the market to bring in, and Microsoft Teams was developed. So Skype is another example why strategy is really important and the timing of the company is really important. Napster. Napster is a company which was basically an online Spotify, but back in the 90s era. The company was selling free music, the company was selling free songs, but it wasn't ideal for that time. They had generated investment, they had generated a lot of money through that, and they were basically about to shut down the whole music industry in Hollywood. But unfortunately, that didn't work out for them. There were lots of legal cases. The timing wasn't right. Their revenue generation model wasn't right, which is why they basically shut down. And today, Spotify is ruling the world. Napster was basically exactly similar like Spotify, but Spotify has done it much better. So coming to startups, there are various reasons that startups shut down and they are not able to, go forward. Obviously, funding is one of the biggest reasons that is highlighted. But apart from that, management decisions are the second most highlighted uh, aspect of the startup failure stats. I don't have exact stats for India, but I've shared the exact stats for UK. The 3-year failure rate is absolutely high. About 90% of the businesses and startups fail by the 3rd year, and it is for various reasons: demotivation, funding, etc., etc., and so on. We all need to be mindful of that whenever you're starting your journey. Have a 3-year plan ready. See how you're gonna work out for the 3 years. See how you're gonna generate revenue, and then work, and then start working, and then launch your brand or your product. So coming to a startup, coming back to how investors look into and scrutinize a startup. These are the general steps that any investor will look into for a startup. Startups are really easy to deviate. They pivot easily, which is why they are called a startup. But you shouldn't pivot from your value proposition. Explaining here further, what I'll do is I'll go step by step. For the first step is basically whenever you're thinking of starting a new business, you're thinking of solving a problem, a solution, you first need to understand your consumer. You need to understand the market. You need to focus on the solution. Understanding the market is basically understanding your competitors, understanding if the market is ready for you, for the solution that you're thinking, if the market is adaptable, is ready to change, and is you can target the early adopters, the first customers through this kind of research. The second step is basically secondary research. You need to show the statistics. You need to show the market size. You need to show the numbers. This is what investors are interested in. They want to exactly see if the problem is big enough. This is how you exactly show them. If the market is, let's say, 100 crores, but there are already 4 big players in the market, there's no point in investing in it now, unless and until you are basically developing such a unique product that it is taking you away from the competitors and making you stand out. Step 3, primary research. Primary research is basically you personally going out, speaking to people, speaking to your potential clients, understanding what their problems are, seeing if your solution fits their problems, understanding whether that solution is perfect as it is or needs some kind of a change to adapt to what consumers need. Primary research is basically you putting in your blood and sweat. That's as simple as that. Step 4 is once you've done all of this primary, secondary research and you're confident that, you know what, this idea is going to work, we've got ready clients who are going to buy our products as soon as we launch. Revenue generation model is where you need to work on. You need to understand how much money you will need, how much funds you're going to need to market the product to further customers, to reach more clients, to reach more mass market. But you need to be smart as well. The strategy that you use for revenue generation has to be apt. It can't be a really minimal product which is not for mass consumer, and you're starting to market it to mass consumer and having a price range of a luxury product which is extremely high end and something like that. So you need to be really careful in regards with your pricing strategy, your marketing, incorporate all of that in your revenue generation, incorporate your employee turnover, and incorporate your employee expenses, your marketing expenses, and so on. Also, you have to be careful and mindful of the revenue that you're generating for yourself to exist, basically, to pay the bills and, live a good, healthy life. Step 4, after step 4, basically, once you've done all of this, you're basically ready to launch a really good product, a well-tested product, which has proven concept, and you're going further. Once you've done this, we come to the next slide, which is basically scaling. How are you going to scale this product now after launching it into the market? So there are two types of scaling, that basically the two stages that you go through. The first is the seed stage, where you're going to prove where the concept is already proven and you need further funds to grow further, basically scale up and expand to either some other verticals or horizontals, depends on your startup. For an investor, this is a high risk stage, because even though you've proven concept and you're generating revenue, the business at itself is a really early stage business. This is the reason where investors will demand and ask for higher equity, because obviously the risk is high. So understand this, and you could probably at this stage use more the people who you trust more, like friends, family, angel investors, to get that funding in and to scale up the business, rather than going for a venture capital firm. After you've done the seed stage, again, you'll come to a crossroad where the business is sustainable now. It's running on its own. You've got a continuous supply of clients. You've got a continuous pipeline of clients. The post-seed stage is where you decide that you're not going to stop there. You want to expand and scale this business again and take that big boost and the big leap again ahead. Investors are really happy to invest in such a company. They would ask you much lesser questions, obviously, because they know that you're scaling up. You've proven concept. You're running a sustainable business. You've got a continuous pipeline of customers. So the business is sustainable, needs funding to diversify to other products. So it becomes a low risk, low equity investment, because investors will definitely not ask for higher equity, because obviously your share price and your stock price is much higher at this stage. So I'll be ending my presentation here and opening the forum to any and all types of questions. Obviously, there are limitations to how much I can answer, because I've not been in India for a long time now. It's quite many things must have changed there. So there are different experts here, like Mr. Kale, who's absolutely brilliant in answering startup questions, and Vyas, who is there in USA. So you can take that guidance as well. So thank you for this time, and thanks, Vyas.
Thanks, Ved. This was a wonderful presentation. Thanks so much for this. I think someone, I don't know who's Uprise Education, but they had a question. So sure. You want to put that forward, please? They want to ask it? Or you want me to ask it?
Oh, okay. It's in the chat, right? Oh, okay. This is
yeah. How can we propose a service startup to investors? That is the question.
Okay, so it depends on what kind of a service it is. Your service needs to be tailored to your product. Service needs to be tailored to your target customer. Whatever your customers are based in, whatever and however they are, it depends on how you're tailoring that service to your customers. It is slightly more difficult to have investment straight away on a service business, unless and until it's a tech business. So be careful about that, be mindful. If you have a tech platform, which is basically a service business, then it's absolutely easy to get investment. Something like Swiggy, for example. Swiggy is basically a service-based business. They don't sell their own products. So that is something which is really easy to raise investment for. Uber, Ola, these are the best examples that you can go for. I hope I have answered that question.
Yeah, and if I just may add in 30 seconds, right? It is investment in service-based startup, or if you look from the perspective of the investors, it is no different than any other investment, in the sense that you still have to show them the workable model. you still have to prove them that you have done this for at least few months, and there is a the revenue model for revenue generation is in place, because none of these investors are doing this for charity, right? They are doing it to get some return on their investment. And so the basic principle remains same, that you have to show that profitability, you have to show the growth model, you have to show the revenue model to them, regardless of what kind of startup it is.
Yeah, exactly. Yogesh, you're absolutely right. Like, everyone needs to understand that investors are not interested whether you're successful, whether your business is successful. No one is interested in that. All they care about is when they're putting in 1 rupee in your business, how are you going to help them scale up that 1 rupee into 10 rupees? That is what they're interested in. And it's absolutely selfish, but that's how the world works. I think I've got another question, which is, okay, how EdTech, etc., online learning startup can be good in India? Which funding group are easy can get funding for such startup easily? Yeah, EdTech is one of the sectors which is raising funding quite easily at the moment. They are all the businesses which I've seen recently. RAAH Ventures also helped one of the EdTech startups to raise, I think, about 10 CR worth of funding. So you can do it, but it depends on how you've established your market, how you've proven concept, and again, what stage your business is at.
Ved, hi. I'm Mihir Kumar. I just had a question for you.
Sure.
Yeah. So have you heard of Startup India or any startup policies by the government of India right now under Modi government? Because these days, as initiatives by the new government of India. So can you help us with some of the aspects of it?
I'm not aware of all of them, although I'm aware of some of them, but I think the best person to go to for the questions regarding government funding would be Pisar sir or Mr. Abhijit Kale, because they are constantly in touch with government bodies, and I think they would be the best people to learn from.
Hey, Ved, Ved, just a follow up on Sharad's question, right? There was a second part to the question, like one about the EdTech. Which funding groups are easy, and can funding for such startup easily? So, Sharad, if you want to just elaborate a little bit on that question, that part of the question. My understanding is he's asking about which funding groups are typically giving funding in EdTech.
See, the thing is, there are venture groups out there who are definitely looking into EdTech sector, and they're really scrutinizing the EdTech sector right now as we are definitely going forward because the whole Indian education system is shaking up. In regards with which group, I can't point you towards a single group. I can't point you towards 3 groups or give a certain number, but you have to hunt for them. You have to look into it. There are groups out there like, okay, I'll give you an example of RAAH Ventures, but this venture capital firm would definitely be aggressive in terms of what they charge you as a startup. You have to be mindful of that as well when you're raising funds through them. So that is what I can say at the moment.
Hey, Ved, I just want to add, if you're looking for...
intervene here when it comes to EdTech. Sorry guys, this is Abhijit Patil. So I'm working in EdTech, and that's why I think I can throw some light on this. So EdTech, EdTech has 4 segments. One is like K-12 segment, which is the school segment, which Byju is playing at. Second one is test prep, right? IIT examination, GATE examination, so on and so forth. Third one is higher education, where we are talking about degrees and diplomas. Fourth one is professional upskilling. Now, every segment has its pros and cons. So when investors will be looking at it, and to name one, Sequoia Group, which is very much well known for investing into EdTech businesses. So Sequoia Group, what they look at, let me tell you. So if it is a K-12 market or if it is a test prep market, that kind of market has a bigger market segment, the bigger size, right? So there the top line matters, like how many. For example, Byju, nobody cares about whether Byju is profitable or not, where they are, of course, but they were not when they started. They spent so much money on branding, so much money on promotion. So they don't care in such business. They don't care what the bottom line is. They care about the top line. How big of a business can you build? Okay, but when it comes to higher education, when it comes to professional upskilling, like teaching people artificial intelligence, teaching people the tech programs, right? Cloud computing, cybersecurity, etc. then the market size is limited. So there you have to show them the bottom line, right? The profitability. And it's very difficult. Trust me, I am into one of those businesses where we have to show them bottom line, the profitability. And it's very difficult because running cost is high, lead generation, the cost of acquisition, all these things are pretty high. So if you are getting into edtech, trust me, you have to decide the product first. Okay, K-12, I would not suggest because Byju is going to eat up the entire market, the money, the kind of money they are spending in. I would suggest get into higher education. There are very less players in it. For example, giving people degrees and diplomas with foreign university collaborations. So my suggestion, Sharath, to you would be, think about which market you are going to get into, and then probably you can think about what point to play at, whether to play at top line or whether to play at the bottom line. All right, I hope I could answer that question.
Thank you so much, Abhijit.
Just to add to that, Abhijit, right? Especially if you are looking at professional, I mean, higher education is a great point, because if you are looking at professional or even K to 12, I think you have to invest a lot in content as well. I mean, I work with some of the education.
You don't necessarily have to. No, you don't have to spend on content usually most of the times, because see, there is one example, Talentage. Now Talentage doesn't involve into content meeting. Okay, they sell the content made by other universities like IIMs and ISBs and IITs of the world.
Yeah.
So there you don't have to spend on content meeting.
Yeah, not really content generation actually, but you have to get good content either through collaborations or through tie-ups. That's what my point was. Like, not necessarily content generation, but yeah, good point. Amit, you wanted to say something, right?
I just wanted to check in India, especially with the people available right now on call. Is there any directory that kind of gives, rather some kind of a database that gives, hey, these are the investors typical, and I'm not talking angel investors per se, but more mature investors. I could talk for North America, right? We could go to Bloomberg Ventures and we could almost instantly find that, hey, these are the top investors that you should be reaching out for this type of work. Is there any availability internationally or India?
I think, Amit, in regards with that, what you would easily get is venture capital or angel group companies which are investing in startups rather than angels. So even if you do an online search, I think the top venture capital companies would come up easily.
Yes, Amit, there are people who can help you.
Yeah.
No, I think his question was more like, is there a formal directory or place, like Bloomberg or something like that? Yeah.
I don't think there's a single place in, I don't know.
Yeah, because other thing is, right, I think we did not talk much about that, especially in the India when you talk about angel investors or private investors. Even as a startup, you have to do the due diligence on the investor as well, right? Unless they are very reputed corporators or something like that. You really want to make sure that you're not crossing any legalities and stuff like that when you're accepting investments from those people as well.
But Yogesh, we say that, we can say that in countries like US, Canada, and other such countries, similar countries, where we can actually do that due diligence and scrutinize what the background of the investor is. But in India, it's extremely difficult because that much of information is not publicly available. Obviously, you have to get in. If you really want to do a due diligence, get a private investigator and make him follow the.
Right. Hey, Ved, just one quick question from Ranjit. What quality, according to you, is important to get your audience to have faith in your ideas?
So this is a really good question. What I would refer back to is the primary research that we undertake before we launch the startup. That is where exactly you already are generating those relationships. You're already generating that trust with the potential customers and the first early adopters of your product or your service. So you need to have that kind of an ongoing relationship until you launch the product. You can't just basically go to any Tom, Dick, and Harry who's walking on the street and go and ask him, have you used my product? If not, do you think my product is good for you? He's gonna give you the most weird eyes that you'll ever see in your life. So be mindful of that. You have to do a really good primary research. That is where you will generate that trust. That is where you'll generate those relationships, and be aware that once you generate these relationships, they are the ones who will basically market your product further. So they are the ones who will promote your product to 3 other people, 4 other people in their families, or whoever your consumer market is. Remember that, and focus on the primary research a lot. Invest a lot of time and efforts, and as I said, blood and sweat into it, and you'll get there easily.
Hey, wait, I just want to say one thing on that. Alignment of values, when it goes to your company, that startup you're building, and the person who's putting money in, maybe it by capital, made by ideas, and you guys suggested if it's edtech, content-wise or whatever, right? If the values don't match, your relationship is not going to be there long term. So that's something I would strongly suggest to start with, because people are not putting money only. I mean, yes, at the end of the day, the goal is money and goal is the profits and everything else. At the same time, the values need to be there. Both companies need to be really well aligned.
It depends, Amit. I mean, I have seen a couple of entrepreneurs and investors here who have absolutely different strategies in the way they do business. But the investor knows one thing, that he is working in his own way and he's generating revenue. So he doesn't care about how he's working or what. At the end of the day, when he's generating a good amount of dividend every year, he's happy with it. So I think what you would say would be much more aligned with social businesses or social startups, where obviously you're caring for people, you're making, it's basically more of a not-for-profit, but still it's a business. So the social business sector is where I think obviously the values need to be aligned. Unless and until that, it's going to be a difficult journey.
And I think that's where Yogesh's point of doing due diligence on the investor comes in. Like, last thing you want is a drug money coming into your business. So that due diligence is really important.
Right. And from the value perspective, right, I think, Amit, again, just to, to add as well as little bit counter what Ved said, right, that's coming from, if you look the trend recently, a lot of people, even from the personal investors also, they are looking into things like, if the company is eco-friendly, whether before they are putting their money or putting the mutual fund. So that thing is growing in that way, but that's still not at the place where value will be the only thing which will drive, right? The first thing investor look is the return for money. And if you have 2 competitors or 3 competitors for that particular pie, then next thing you will look for the value, but it won't be other way around, at least for now.
Hey, Deepak, Jyotiram Patil, actually a question there in the chat. Just wanted to kind of get that can you file a patent against your innovative business idea? How can we avoid copy of business idea or business model?
Yeah, you can generate, I think, in India as well, you can have a copyright of your business structure and your business model. And if you have a particular service or product, you can easily file a patent. So that wouldn't be a problem.
Yeah, I think there are patent laws, there are IP protection laws.
Protection laws which come in, they come in handy during any kind of a copyright dispute.
Right. Abhijit, I think Sharad wanted your contact number as well. So if you can just share that in the chat as well for Sharad. And I think we'll just 5 minutes over.
Yes, so can you please ask my question? I have just
there was one question.
Yeah, sorry. Please go ahead.
So a question was just put by Abhijit sir is basically what is the attitude of PEs and VCs towards startups during and after pandemic? It seems that startups are being pressurized too much. Yes, that is the case. The startups which have not mitigated their situation against the pandemic are pressurized in a great extent. For example, the tourism industry across the globe and any startups which are working in tourism industry are pressurized to a really, really great extent. But at the same time, VCs and PEs are investing in startups at an unreasonable scale at the moment. This is 2020 and 2021 is the highest point in the past 5 to 10 years when the investors are actually opening up their pockets and investing in businesses. This is basically because the stock values are generally lower at the time. Obviously, this becomes a good opportunity for investment. Apart from that, all of the businesses, or let's say just for example, tourism sector, these businesses have already proven concept. they have already generated revenue before the pandemic, and they have shown scalability. So because of that, they know that as soon as the world comes back to a new normal, or whatever situation will be there after the pandemic, these tourism startups are going to scale up. They are going to blast off into the space. So they want a bite of that. So VCs are definitely, going into top gear in regards with investment.
And big time investors are sitting on a pile of cash anyways. If they don't have ability to feel anywhere, considering not a stock market is not an option, they're obviously putting a lot more in the startups.
Yeah, but Ved, just one question. Mostly these great guns are interested in putting in bad equities or bad assets. That is their normal thing, and get into good asset, I think, and then convert that money very fast. So that's why I asked this question of pandemic. Now, what is their lookout?
The lookout is basically at the moment the sustainability. It's all comes down to sustainability, because any and every business which is sustainable even during this pandemic period has shown that they have the resilience and they have those resources and the strategy to sustain any kind of hurdle or any kind of economic variability. So they can definitely face that variation in the market. So VCs are definitely looking into that. If VCs see something where they definitely find some kind of a big question mark, they find doubts in how they are strategizing their business, then they are definitely not considering that as an option.
Yeah, exactly. And I think you said it. Resilience is something which is not really new to Indian corporates. It is very new to Indian corporates. And if you see big bulls like Brookfield or Blackstone, they are already here in India.
Yeah.
So do you feel, I think the recent statement even of ex-CEO of Amazon, I think who stepped down just recently, I think India has a huge potential. So what is your view on, from that particular perspective, will most of these venture capitalists or PEs globally who are like leading the entire movement, they will be in India?
As much as I know finances and the way, sitting in the UK and how the UK market is working, what I see India as an extremely fast developing nation, because India is moving at a pace which is astonishing, to be honest. No other country is moving at that pace. Countries which are developed, for example, Canada, US, UK, these economies are already have maintained that saturity level of startups. They are maintaining that saturity level of, how much economic progression they can have. So there is an economic saturity in terms of that. Whereas in India, sky is the limit at the moment.
May I add something very specific to it? So, Abba, to answer your question there, right? The Canadian Pension Fund is the world's largest pension fund that exists. They own a piece of pie of Microsoft. That's how big they are. Okay, and that's by force. Even they actually, Ved mentioned Renew India as one of the companies in the startups, right? So Canadian Pension Fund is the largest investor of Renew India. If you could Google it, you could find it on Bloomberg as well. So that's how aggressive these funds have become to invest in India, because that's where the growth is, and they would do anything for this growth.
Yeah, absolutely. And we did not speak, in the presentation, the types of investor when you showed, you spoke about corporate investor. That is another area, institutional investors like the funds and banks and all. That's a great area. But I think to come to that for the startups is a little bit of a stretch at this point. That money getting into startups is a little bit of a stretch at this time.
It depends. Also, another attractive point for investors is the Indian population. The market itself is at one place, 1.5 billion people to target. Or, if you're a B2C kind of a business, it's absolutely brilliant for any kind of investor and any kind of startup. That is the reason that Chinese investors, Japanese investors, SoftBank, for example, why are all these companies for the past 5 years, they are coming into India? Because they see that potential. China is the other economy which basically competes India. in terms of population. But the Chinese government have their own rules, and they do not. They are basically not happy in regards with getting foreign investment into their companies. So because of this, India is the second best option, and with 1.5 billion people, and basically I think by 2025 India will become the world's most populated country. I don't think investment is ever going to slow down, at least for the next 10 years.
Great, yeah, great insights. Guys, I think we are 12 minutes over, but I think we should have another session with you, Ved, so that we can get, and do some more discussions like this. And thanks once again for your time.
Awesome.
And it was a really wonderful presentation. Yeah, lots to learn here. Thanks a lot.
Yeah, hope it was useful for people. So
yeah, very much so. And I think you're going to have a lot of people. I can already see this in the chat, and a lot of people thinking out of the box. So a lot of people wanting to talk to you, and hopefully we can also connect you with a lot of people at RIT who are actually doing a lot of work. As I had mentioned to you, a lot of faculty doing a lot of good research work. So hopefully they're also looking for certain options, and maybe that's something mutually beneficial for RIT as well as you.
Pisar, basically, as I said, it was an honor. Basically, I learned from Pisar sir, and today presenting in front of the same professors, it is a different feeling.
Right.
It's really it feels good in regards to that. But yeah, it's been good. It's a really good opportunity. Yeah, Sawan sir, you were going to say something.
Yeah, Ved, it is great to hear you. Yeah.
It might be so satisfying.
I know.
Sorry, sir. Please go ahead.
I know that because he was there for up to 2016, and what he was doing that I know. He may be remembering. Right.
Yeah, I was a really notorious student. Mostly out